such a haphazard environment. You really got to catch lightning in a bottle here. Up one day and then it's down the next. And so that's why, to me, that you got to keep your eye on the charts. There's always some news that comes out, where Okta, went up, I think this day, it fell $12, rallied all the way to unchanged. And then, you get caught up. So the danger of this kind of environment is that on the up days, we get ourselves all worked up that this is an uptrend, and on the down days, we can see that this is actually, maybe a downtrend or a downtrend ready to begin. Also, this is kind of an end of the month thing. So there's an end of the quarter. So there's all kinds of institutional stuff that goes on at the end of the quarter, all kinds of rebalancing and things of that nature that go on. And so, this is why kind of good idea to keep your eye on different time frames, because sometimes, in the short term, it looks like something, but then there are certain mechanics and certain things where you can see we've got a reversal, and this is likely going to finish somewhere to the higher part of the monthly bar. So whatever we think intraday or, looks like something, you got to, kind of keep your eye on these different things. And so, now we have this kind of pending key reversal. And I always, it's kind of like when somebody tells you something, you should learn to believe them. And when the market kind of points in a certain direction, when you see these kind of things, hard to fight them. Now, look, it could continue to fail. So into next month, we could then get this continuation of this downtrend. And, then if it looks like this, then we're, kind of back to where we were. So, on one hand, I say to myself, okay, we have this key reversal. On the other hand, I say, things that come, kind of straight down don't usually go right straight back up. But, look, I mean, we could have a V bottom here where you just go and, market, creates a new reality. And so this is where the conflict comes in. There's just so many push and pull. And, that's why I'm, looking at very individual situations. I'm really upset. I was looking at this coil in Uber. I've been talking to you guys a long time about it. And, every day it kind of de-risks itself. And yesterday I kind of wanted to buy it on the close. And I said, I'll wait for the opening. And today it's going to open $2 higher. So, I mean, those kind of things really peeve me. But, so we're looking at these cues within the confines of this monthly ascending, wedge triangle. Now, these ascending broadening triangle. Now, again, where this goes is really the market will tell us. So, when we saw this in gold hit the lower end and then went and, remet the old highs. So what I do is I kind of draw my structure and then I kind of see which way the market wants to take within these structures. Now, about, a year ago, we saw the same formation in the euro yen, come here and then, go all the way to the beginning. So, there's obviously two scenarios that could play out here. One is we caught a bid here and we're going to go back and, greet these highs or nearby. Or, we start failing and, we start then going to this lower end and, the 340 would then come back into. And so right now you're in this giant kind of washing machine between, I'd say 370 on the upside, 320 on the downside. And, we could see some swings, but, again, we're going, a week from now, we'll have an end of the quarter rebalancing. So these managers, have to buy things for their portfolios just to dress them up and what have you. And so there's all kinds of mechanics. But we're just in this, very ambivalent thing. But really, I mean, as difficult as it is right now, the markets are inherently bullish until proven otherwise. You just don't want to go down. And, when you see these kind of reversals, very difficult to fight them. Now, if we get a failure at the end of the week and, that's why to me the close is so important on whatever time frame you're looking at. So, these price bars right at the same thing, this double bottom, and then the way these things, very difficult to fight that. Very difficult to say I'm going to short against that. On the other hand, it's if we collapse this week and kind of close down here, then maybe we could, even then it's a dicey proposition. The floor looks like it has been put in. So, so that's just kind of background. But with that said, we're in this giant kind of, again, trading range, and that the path of least resistance right now seems higher. The market is shrugging off. It's climbing a wall of worry. Fed, Ukraine, gas, everything. And I don't know if this is just mechanics. I don't know if, again, this is where I see this pattern sitting up here. And, this kind of price action, if you will, sitting down here. And it just creates a lot of, headaches. And then it really just comes down to the individual risk reward, finding things. So, here's the shoulder. And if we start, kind of coming up through and canceling this shoulder, then it's going to start busting the implications of, what this looked like. So, we see a whole bunch of stocks that kind of had this sloping neckline and then really didn't confirm. So you can kind of see here, this was the trap. We came, but we didn't come down and bust this sloping neckline. So we came just a hair shy of it, and then it's a trap. So, it's kind of like, if it's not going this way, it's going that way. So, this is where, the reality of markets diverge from the textbooks, because we see the textbooks, and then, typically in the example of the textbooks, we see this and we go, oh, that was a beautiful head and shoulders. And if I'd seen it, I would have played it. But very often the markets, they kind of, do this and they stop shy. And so, you got to be very observant, because it will kind of suck you into the lowest level and then pivot. So, we're just kind of in between all of these things, and, maybe we go back here. And so, again, I just think that this market's still kind of, digging in here, now what does it mean? I mean, we've got, we've been looking at things like, I think like Facebook. I mean, I think it's found a short-term bottom, but, then I say, well, how sustainable will, the rallies be? So the key is just to wait for a little area, a little coil, and get a little, so I'm just looking for short bursts of energy where I can take them. And so this to me was coiling. And the more something coils, it kind of starts de-risking itself. And I really wanted to buy this yesterday. This is Uber. We talked about this for a long time. To me, this is a bottom. And then the last 1, 2, 3, 4, 5 days, you've kind of been boxing, one within the other, these kind of inside bars, one within the other. And you're creating this giant coil, the storage of energy that, is going to unleash, I think, to the upside by virtue of, this pattern here. And so unfortunately, Uber is now, looking like it is gapping up. It's up $2. And so to me, this is extremely low risk, to buy it here and, put your stop, either under there or, under. So you've got literally $1.50 risk to make 10. So these are things that, independent of whatever the market's doing, I'm trying to hone in and try and find pockets of coils or build up where I can then, look at the risk reward. See, 45, it's 1.3 million.
$1.3 million short.
So pop out a profit for 118,000 there. So you can see how this is going crazy now. You can
see how the market just going nuts.
I bet like $1.6 million on this position. I'm showing right now $23,000 gain.